Hi, my name is Greg Crawford. I am the editor of TABB Forum, joined today by Paul Rowady, Senior Analyst at TABB Group. Paul, nice to see you.
Greg, good to be here.
So, Paul, there's been a lot of talk in the last several months around the issue of latency, and certainly on TABB Forum, we've had articles and some videos talking about latency and relative latency and speed in general of trades and getting messaging and things like that. And I wanted to get your perspective on it from some of the work you're doing, and tell me a little bit about your thoughts on latency. It's kind of taking it to a new latency 2.0, if you will.
Yeah, I had, if I had the guts back in June of last year, right after the SIFMA conference, when it was a bit of a different conference, a lot of the bigger players were sort of off to the side, and what was left was almost unanimously latency technology companies. It was just saturated. And that's typically an indicator that something is about to change. And I thought at that time, and I think more so now that groups like F10 are being absorbed and there's some consolidation going on, larger companies, rather than building this capability, that they're actually going out and buying this capability, that we've now made a turn and we've gone from latency being an incredible competitive advantage, which in some cases it still is. So there's lots of disclaimers around this.
Sure.
But really what I'm talking about is sort of what I've called the tip of the spear, where you have a very few players that are trading at the fastest possible speeds, and when you get to the tip of the spear, there's only so much space for those very few players.
Right, yeah.
Everybody else is sort of playing catch up or off somewhat of the bleeding edge. I think that we've turned the corner and we've gone from latency being mostly a competitive advantage to now being mostly a competitive necessity.
Okay, so what does that then mean for those traders, for money managers, people like that who sort of rely on that, if it is something that is needed now, how does that playing itself out?
Well, okay, so the couple of caveats first before I dive into that. Sure. I still think that if you're a broker that wants to have a strong algo offering and you don't have the best technology, then you need to continue to make investments there. So I'm saying that there's still going to be strong demand. It's just that these are the guys that need to, the Me Too guys that are now catching up. That's number one. Number two is there are still certain asset classes and certain channels and certain regions where latency isn't nearly as developed as it is between New York and Chicago. So the index ARB or the ETF ARB or the U.S. equity market fragmentation ARB, that's where latency is the most mature, and there's only so much room given the liquidity. And we pretty much know who those players are. It's going to get harder and harder and harder for new entrants to pierce those markets.
I see.
And typically what happens is those advanced players, those that enjoy being at the tip of the spear, are then going to take that capability and certain intellectual advantages, IP advantages for their success in this initial market, and take that elsewhere. So what that means is that for those that previously would be chasing their place at the tip of the spear, and there will be some that cross over, but for the vast majority of them, they're going to have to start developing capabilities that allow them to look elsewhere for new sources of alpha.
Okay.
And what that means is they have to get off the tip of the spear. They actually go and have turnover frequencies that, God forbid, are in the, still intraday, but they're, every minute or every hour or every day. Some of them will have a hard time, going longer than a day, because then you have to start posting margin, and there gets into a whole new margining, collateral, and balance sheet management issue.
Okay.
But I think that this, and I've been waiting for this for a long time, I think there's an opportunity that you need to develop new capabilities, and in doing so you need new tools and new ways of managing data, because ultimately that's the raw material for the trading signals. You have to look at different styles, and I think that we're embarking finally into a much more recognizable era where it will become much more important to be able to find patterns in the words as well as find patterns in the numbers.
Interesting. And are there, I mean, as you know, the tip of the spear with those, you know, firms that are sort of at that edge, I mean, are there likely to be, I mean, I suppose there are, but can you identify at this point who the firms that are kind of leading that charge, that sort of see the vision that you lay out and moving in that direction to find, you know, those data sources and that technology to maintain that edge? Or
well, I think that those, and I'm not going to name any names here, but those that, you know, most of us know who we would expect to be at the tip of the spear, they will travel more laterally. In other words, they will look for similar high turnover strategies in different regions, in different cross-market inefficiencies
Right.
of market structure. Okay, I think they would rather go laterally because that's more cookie cutter than it is to develop a whole new style that's, say, at a different turnover frequency that's
Right.
dramatically different. You start slowing the turnover frequency down, and the fundamentals of the underlying assets start coming into play.
Sure.
And you need to have to care much more about that. Right now, being at the tip of the spear means you don't really care what stock it is or
Right,
what the
just
ticker
going.
symbol is. You're
Right.
just looking for patterns
Right.
in the market data that suggest that there's some sort of very short-term anomaly that you can capture, you know, fractions of a penny.
Right.
And you can do that with enough liquidity. You can do that with regularity. What I'm talking about is introducing new types of trading signals based on new types of data sets.
Interesting,
And
yeah.
it sort of feeds, you know, at least in my case, some fascination with, you know, are there trading indicators embedded in all the news and in all the research and all the, you know, the blogging and the
Right.
websites and even the twittering, the Twittosphere.
Right.
You know, there's likely to be something there. It's very complicated and it requires new skills, new tools, new expertise, but I think that that is in part the wild, wild west when it comes to finding new trading indicators and ultimately finding new sources of alpha.
Cool. That's pretty interesting. I mean, you know, certainly that that search for ideas, for investment ideas, and you know, capturing the alpha, as you mentioned. I mean, that's a never-ending game, right? People
Yeah.
are always going to be doing that, particularly, you know, when you've got the asset owners who are scrounging around to try to capture returns, still trying to make up for all the lost, you know, couple of years. So,
Yeah.
so that'd be interesting. It'll be interesting to watch as that plays out.
I intend to watch it closely. I think
I wonder.
it's-
Sorry, I wonder if you know, we had Allison Crossett was here a couple weeks ago talking about HFT in 2011 and consolidation in that space, and kind of what you're talking about. Maybe we'll see fewer high frequency trading going around as people kind of look for different ways to, you know, to capture those.
It's possible. It depends. Again, HFT is really not a great name. You know,
Yeah.
the semantics tend to get a little bit distorted because high frequency trading, you know, at the tip of the spear, sure, but high frequency, you know, turnover of once a day, turning your portfolio over once a day is extremely high turnover.
Right. That's
So, but yet there's a galaxy of difference between the trading platforms and the trading styles and the indicators and the data sets that generate one-day turnover versus microsecond turnover.
Yeah. Right. Right.
Those are, you know, galaxies apart, and yet they live under this same HFT umbrella. So, as readers of our work know, we often spend some of our time trying to demystify and demythologize and sort of sort out the semantics because
Right.
they often they're somewhat crude in the way that things get lumped together.
Good point. Well, we'll leave it right there. So, again, my name is Greg Crawford. I'm the editor of TABB Forum, joined today by Paul Rowady, a senior analyst here at TABB Group. Paul, thanks for being here.
Thanks, Greg.